And the latest data from the NBS shows that inflation seems to be decelerating as we see it peaking from February 2024. If you look at the data there, we see from February, food inflation, that rose about 3.79%. Then we saw a drop there to about 3.62% in March 2024. Then back to April, we'll see 2.50% rate of increase. That's for food inflation, even though still at about over 40% at this point. For the headline inflation, we also see that deceleration from February 2024, 3.12% from February, and then March we had 3.02%, then into April 2.29%, and we see the same trend with the core inflation, just a snap there for the core inflation when we look at from February to April. Just March had an uptick compared to February 2024. Well, joining us now to unpack this is Gospel Obele, Chief Economist at Streetnomics. Joining me via Zoom from the UK. Great to have you, Gospel.
Hi, Ladi. Good afternoon. Thank you so much for having me. Really
right.
Great to be here again.
Yeah, great to have you. It's a rainy day right here in Lagos, but we have the inflation data. It's rising at a slower pace. What do you think is helping this? I guess we're trying to count our blessings here, even though it's still high.
Yes, I mean, either way, it's still rising, and that's the concept of inflation rate. It doesn't necessarily tell you that prices are dropping. It just tells us that prices are rising but at a slower rate. So either ways, it's still a very price-stricken economy and very strong prospect for a hike in the cost of living crisis as we go on. It's just that prices are now increasing at a much slower rate. And this was likely part of the projections we had as per outlook, into the month and earlier in the year, that the constant interest rate hikes, whilst the benefit or may favor investors market or financial services as the case may be, it's a weakening further down the line in terms of the cost of living impact for the average Nigerian and the cost of doing business. I've also seen that, structurally speaking, whilst inflation has been brought down in more developed economies with the use of interest rates, it's sort of a bit trickier in Nigeria, given our structural deficits and the challenges we have more structurally in terms of ease of doing business, in terms of being a high import-stricken economy, in terms of the exchange rate dynamics and all of that. So, So yes, while it's a positive to see that month on month has been dropping, it's really not much of a significant impact on the cost of living dynamics, taking into consideration the central bank constant increase in interest rates.
So definitely we've seen, about over 600 basis points hike for the first quarter of 2023. So is this what is helping, slow the pace of rise, really?
Well, it's fair to say that what I think has sort of slowed down the pace of that rise has been more or less the central bank interventions within the cost factors in the economy, starting with the exchange rate and the state of the currency. And that central bank involvement has more or less become sort of trying to moderate the market than an appreciation of the currency. And in the context of moderating the market, we've seen how that has been able to buy us time. It doesn't necessarily mean that there's been any structural or policy reform to sort of help pace that increase in prices as it were. So I would be surprised if month on month going forward into the coming months of 2024, we begin to see a further increase in month-on-month percentages. And that's because we've seen again that the exchange rate has gone back to what it was earlier on in April, prior to the central bank heavyweight involvement and all of that. So we've clearly seen that the Nigerian economy is more or less in need of more structural and sustainable solutions that could also impact on inflation and the cost of living dynamics. Whether the price of goods and services are increasing at a slower or faster pace, it still pinches the average Nigerian across the basic necessities and need, all right, to get by on a daily basis. And that's where I think that, policy reforms have to get to in terms of its impact and it being able to scale improve standard of living for the average Nigerian.
Right, we definitely hope to start feeling it when we go to the markets to go buy goods. But what are you expecting for the next MPC meeting? That's coming up next week.
Well, like I said for at the previous MPC meeting, that the the quote unquote the more intelligent or institutional context thing to do is to hold rates or drop rates. But the more politically correct solution will be to raise rates, and which has not happened. All right. So again, I'll still stand for the fact that rates need to be held or dropped. But I would not be surprised if they increase, but I would expect them to be held because in this case, the central bank needs to be able to focus on other elements that impact on the cost drivers of the Nigerian economy, working more closely with the fiscal authority. We've not seen much of that than having to increase interest rates. I think a further increase in interest rates would impact on the Nigerian economy negatively, especially when it comes to access to finance and the cost of production or cost of doing business and the cost of living for economic agents.
Right, definitely be watching out for what happens next for the next MPC decision. Some are saying maybe 150 to 200 basis points hike, but we'll definitely see what the CBN does next. Thank you so much for coming on. That was Gospel Obele, Chief Economist at Streetnomics. Thank you so much.
Thank you.